Hey folks, Dan Frio here, the rate update. Today we're going to talk about how much home you can afford based on your income. But the first thing we're going to talk about is what happened today with the Fed. How did the rates end at the end of the day? I do not have Black Knight's rates. I'll post those tomorrow because there's so much volatility in the market right now. Even if rates were posted earlier, they wouldn't be valid right now. So I'll give you guys updates on that. But I got an interesting video coming up, so don't go away. Pay attention to this one. You might learn something. Okay, so first thing I do want to talk about is let's go through the headlines, and I want to debunk a few things, or at least advise you guys on what the Fed does. So right now it says, as the Fed sticks to the near zero rate policy for now, here's what it means for you. So basically, let me explain what the Fed does, okay? The Fed is basically in place for two mandates. It's full employment and to keep inflation in check, okay? That's what they do. The only interest rate that they directly affect is the federal funds rate. It's basically interbank lending. Okay, that's it. When they say zero, you're not getting zero. I'm not getting zero. The banks intertwining with each other. That's what they're lending each other money at that price. In a nutshell, just take it for what it's worth. So that's what that is. So what they do, how they play a role in the market, such as mortgage rates, or we reference it and we follow the mortgage-backed securities market, is a bond that trades that the Federal Reserve has been going in and buying a bunch of. And as they're buying it, because they're adding more liquidity in the market, they're sucking out the demand, they're jacking up the prices. Okay, when a price of any bond goes up, mortgage rates or the yield on that bond goes down. And when it's a mortgage-backed security, it drives down mortgage rates. So that's what they do. That's what they've been doing for the last almost 2 years now. They basically came in and said, we're going to start tapering that when we feel the time is due. I think it's getting there, but not there yet. And that's what we've been talking about. So the tapering basically means they're buying $40 billion of mortgage-backed securities a month to keep the prices elevated. They're going to start backing out of that. They might go to 35 billion and 30 billion and so forth. And they even said in the notes today that they're not going, it won't be basically to zero until the middle or latter part of next year, okay? But it's still a bond that trades on Wall Street, so there's other investors involved. So if they get kind of skittish, they'll stop buying mortgage-backed securities, and it's just going to be catastrophic. So you might see a quick little spike in mortgage rates, and then as the dust settles, it'll come back down. So we're not freaking out. I locked in everybody previously to what happened today, and I'm going to go over that briefly with you. But what I wanted to talk about today, so hopefully you got educated on what the Federal Reserve does and how they're kind of affecting mortgage rates and the word tapering, what that means. So hopefully you got that down. So let's get on to the broad news, and then I want to go over some numbers with you guys just to educate you on, don't freak out about these housing numbers. It might be beneficial to you in the long run to get into housing now, but I'm not saying it's a good or bad investment. You make that decision. Fed sees signaling tapering as federal plow plays down the liftoff count. They really don't know when it's going to start. Okay, the majority of the analysis is saying November and December. I'm going to somewhat agree with that. It might even be pushed over to December. They don't want to get behind the eight ball on this, but they're closely monitoring in the employment numbers as we are here. And I'm going to come out. I'll give you guys the unemployment numbers tomorrow with our economic calendar. All right. So the next thing is I want to talk about. There was headline news today, and it basically says August existing home sales numbers down 2% from July. Okay, don't get too excited because housing is still very high priced. But what you're not seeing in some of this, and what they really don't explain to you, they put it in writing, but a lot of people don't read this. They just see or listen to the captions they kind of want to hear. But if you look at this, just look down through here right now. Sales of homes priced below 250 fell compared with a year ago. Okay, while home sales of prices over $1 million rose 40%. Okay, so that's skewing the average priced home that's selling because the $1 million market and above is just kicking right now. Okay. But what I wanted to do is I wanted to say right here, tight supplies push the median existing home price in August to $356. All right. So we have a tool on our website. So go to therateupdate.com. All right. Go right over here to buy a home and go to affordability calculator. Okay. So what we're going to do is we're going to look at how much you can afford if you make $80,000. You have about $400 in other bills, 3% down. That's our first-time home buyer program, plus some of the grant programs that we have for you at a rate at 3%. Now, this will change, but we can make minor changes to this right now. But I want to let you know where you are today. All right. 30-year term, property taxes. This is what it defaults to, as well as homeowners insurance. Okay. So you can afford a $360,000 home, still fit in what we call the debt ratio. You can actually go up to a 50% debt ratio. So let's move this to, let's say you have a car payment and some credit cards and a student loan. So it's $750. Your debt ratio, where's that put your debt ratio? 38. Okay. I don't know if that moved. Here, let me check this out real quick. 500, that might not be moving. It might just be skewing my, yeah. Okay. So it's really not changing any numbers there. But what I want you to pay attention to is right down here. How much would that payment be? $2,530, okay? So how much of a house is that buying you? Well, $360,000. But what's the average rents? And I just pulled out, we do a bunch of business in Austin, Texas. So I pulled up Austin, Texas. And what's the average rents? Well, you go from 2,000 in certain areas, but look at the majority of them. They're around 2,500, 2,600 to 2,700, 2,800, right in this range here. Okay, so that's where I got the $2,500 payment. All right, so let's say, for example, you're in one of these other areas. You know, you can afford $2,900. Well, how much of a house would that get you? Well, let's see. Let's max this out for that person. They can go up to a 42 actually debt ratio when it comes to conventional financing. You get about a $400,000 house at $2,800. So that's showing you right there how much you can afford. Okay. I'm not saying this is what you have to afford. I'm saying this is what you would qualify for. So let's now change this rate to 3.25. Where's that going to change? Well, it changed it to $399 and the payment went to $2,700. It went up just about $100. All right. But think about it also. Does your rent stay the same year after year after year? Probably not, because I keep getting alerts every week on what rental prices are doing. So that's where that is. So now let's, the next step, and I'm working on this on our end, so you can just do all of this on our website. How much of a house can you afford? Or is there homes available in Austin, Texas for 400 grand? Well, let's find that out. So we go to Zillow.com. I'm not a huge fan of the Zillow website. But let's just see, are there any houses available for 400,000? Well, there's quite a bit. There's 165 homes for sale. So what I'm trying to get at is I'm not trying to make light of it, but mainstream media is making a huge to-do over this. Housing prices are way out of realm. People can't afford those, can't afford that. Guys, you're paying rent anyways. If you're not paying rent, God bless you. Stay where you are as long as you can and save up as much money as you can. But if you're paying rent, go to therateupdate.com. Go over to the buy section. I'm going to show you that one more time so we're on the same page. So what you're going to do is go to therateupdate.com. It's going to take you to the website right here. Okay, you're going to go right here, buy a home, affordability calculator. Click it, fill in your details. And if this number is something that you like and you need help getting pre-approved and you help finding a realtor, you need help finding an attorney, you need help finding a home inspector, we can be your one-place shop. So we have realtors that we're partnered with all throughout the country to help you guys find a home, attorneys, home inspectors, the whole ball of wax. We can be your one-stop shop to get you into a home, as well as all the grant programs that we have availability to give you with. If you don't have any money down, it's a great way to go about getting into a home with no money out of your own pocket. So that's it for today, guys. I hope you find value in my videos. If you do, please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert, and I look forward to hearing from you guys. Please go to therateupdate.com, check out all the tools we have. If you'd like to learn more about me and my team, or reach out and get a consultation from us, all you need to do is go back to the home screen, and it's also static on the top. Give us a call at 844-775-LOAN, or you can apply right now online by clicking that button. It's going to take you about 10 minutes. We have a new system coming out the first of next month that within 4 hours, we can get you a complete loan approval, even if you haven't picked out your home yet. But to do a one-on-one consultation with us, we've added this feature about 2 months ago, and it is our #1 feature. Just click it to schedule an appointment. It'll open up all the days and times we have available to you. Then just let us know if you'd like to do it by Zoom or by a phone call, and we will reach out to you at that time to make sure all your questions are answered. That's it for today, guys. I appreciate you guys watching. Thank you so much, and I'll see you tomorrow. Bye-bye.